Google is a company that we all know, and it is sometimes referred to by the name of its parent company, Alphabet. This company has analysts going crazy, having received 32 ratings, with 26 of them being strong buys. Currently holds an average price target of around $154, which shows a 16% upside from where it is right now. Today, we will be taking a look at this highly profitable, innovative company, which has incredibly consistent cash flows with very attractive long-term growth prospects for the different moonshot projects that it hosts. So today we will be talking about Alphabet, Google's parent company. Don't worry about the drone, I will explain to you in the next slide. Google is not a conventional company. We do not intend to become one. This was something I found in one of Alphabet's annual reports, and I could not agree with them more. They currently divide their business into two categories. First one Google, and second one non-Google offerings. Inside Google, we have services and Google Cloud. But inside these, they are currently providing new offerings, such as multi-search, which is that now we are able to search with images plus text at the same time. The second one is one that you may have used before, called YouTube Auto Translate, which it is able to auto translate the different documents inside or the script for a YouTube video without any other input. Also Google Maps Immersive View, and even AI generated summaries inside Google Docs. And finally, the Google Pixel Watch. The main future bets that it has right now inside the non-Google segment is first one, Wing, which is autonomous drone deliveries, as you have seen in the previous slide. Also Calico, which is a pharma company which is going to specialize in age-related diseases. Also Waymo, which is focused on autonomous driving, as you can see in the picture over here. And finally, but not least, DeepMind, which is an AI system for protein analysis. These are just 4 of what they call moonshot projects, but they have so many more. The financial analysis for Google looks really, really, really beautiful. They have a very high return on capital employed of 19%. The average here is 10%, and anything above that, the higher it is, the better. They have an insane interest cover of almost 200 times, which means that Google has basically zero liability risk. They have a great cash conversion of over 100%, which is 132%. And this is great to see because it basically shows how good a company is at converting the money that they create, their net income, into free cash flow. And this is important for investors, as free cash flow is, in the end of the day, what us investors will get out of the company. And then in terms of margins, they are majestic. They have a profit margin of 55% and an operating margin of 25%. And these have been stable for a long time. Now, when looking at their fundamental analysis, I would give Google a straight 8 out of 8. They have, as we have seen, extremely low liability risk with a very, very solid balance sheet. They are insanely consistent with their cash flows, and they do heavy share buybacks. Adding to this, they are great at providing organic free cash flow growth and great at generating organic revenue growth. And to add just a bit of the icing on the cake, they have a great existing moat and competitive advantage, one of the strongest, I believe, that exist out there. And linked with this, of course, is their immense pricing power to advertisers, which is, of course, their main source of revenue, which I believe right now accounts for almost 80% of the company's revenues. Their long-term analysis, they are a company that has insane growth potential, as the majority of their projects and their services follow secular trends, whether it has to do with their pharma companies, which are focusing on age diseases. All their companies that are focusing on data analytics. They have cloud services. They have autonomous driving. They have drone deliveries. They are always trying to focus on secular trends, either with their main offerings and with their moonshot projects. And they have 2 great avenues of growth, which I believe will be very profitable for them in the future. The first one is expanding and improving their existing services growth. By this, I mean, for example, improving the conversion rate for users in YouTube Premium, improving the amount of money they're able to generate through ads in Google Search, YouTube Search, or others, and also improve their adoption of the Google Cloud for other businesses. And on the other avenue, they have their moonshot projects, which are the ones we discussed before, with the Waymo autonomous driving, the Wing drone delivery, their pharma companies, and other moonshot projects they have running in the background. In terms of valuation, I think this is a company which will always trade at a premium no matter what their circumstances are. And right now, I believe it's trading at a reasonable valuation. I will not say it's cheap because it has some headwinds we will discuss later, but I do not think it's an expensive price. I think it's reasonably valued right now. As we can see in the historic PE ratio, it is right now trading at a PE ratio of around 25, where it used to trade at a PE ratio of around 30 in June 2020, and the lowest it got was in September 2022 when it traded at around 18 PE ratio. If you manage to scoop up some shares at this period, you will have performed really well with Google stock. But additionally, it has a free cash flow yield of 4.63, which is a lot higher than the long-term inflation rate of 3%. And this is great, shows that it is an attractive valuation, because I follow Terry Smith's approach in saying that if the free cash flow yield of a company is higher than the long-term inflation rate and the company will have positive growth rates, then it is considered to be at an attractive valuation. In terms of risks and possible challenges, I believe their main challenge will be the regulatory, but first we'll see with competitor landscape. I believe that Google is a company that right now faces little competition due to their competitive advantage as a whole. However, I do see that their main source of growth will be in the cloud business and in their moonshot projects, and I do believe that the competition in these two areas is insane. In the cloud services, you're competing with AWS, which is the clear leader in that aspect, and you have the Microsoft Azure. So you're competing in a new industry, which is highly lucrative, with two of the biggest companies in the world, which are Microsoft and Amazon. So I believe that that is what actually makes me be a bit scared and consider highly the risk of a worsening competitive landscape. In terms of regulation, there is a big risk in the regulatory landscape, as they are right now being faced by many antitrust procedures in the European Union, for example, and in the US. In the European Union, last week, I believe, or 2 weeks ago, there were discussions of a potential breakup of part of the advertising part of Google, which would be not a best case scenario for the company, as we spoke about, advertising for Google is the major source of revenue. And also for the US antitrust procedure, it's going over whether it has a monopoly in the search business, and Microsoft is heavily involved in this procedure. Now, in terms of performance, I don't think they have any risk here. They are extremely consistent, predictable, and resilient. And in terms of market, the only risk I do see here, it's a 60%, ignore the 80, it's a 60%. And the only risk I see here is that if there is an economic downturn, which I don't believe it to be that likely, the advertisers usually spend a lot less. So this will impact Google's ability to generate cash flows. Now, before we move on to the investment conclusion, I must add that I'm not a financial advisor. This is not financial advice. Please do your due diligence before investing in the stock. But I believe that it has a moat with one of the strongest competitive advantages that exist in the world right now. It is able to provide one of the most consistent free cash flows in the world as well, extremely predictable and extremely resilient, and it has a very high return on capital employed, which is great at creating value for the investor. This overall equals for it to be a great company and a great investment with possible high returns. However, I'm not going to buy because I'm a bit scared of the legal proceedings. I believe they will perform extremely well. I just want to see how the legal procedures play out before I decide to take a stake in the company. So as always, this has been the Cashflow Compounder. Thank you for watching. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic.